The auto market in the entire Middle East is less than a fifth of the size of the United States. Only about 3 million cars sold in the region in 2025. But it's more important than that number suggests, and it's because of cars like these. In terms of volume, Iran is the biggest market in the region. Two of the top three biggest sellers are domestic car brands, Iran Khodro and Saipa, which only sell in Iran. Japanese car maker Toyota, Korea's Hyundai, and Chinese maker Chery are the three biggest international brands. But the region has become an important high-margin growth market for luxury and premium car makers. Luxury demand is especially concentrated in Gulf markets such as Saudi Arabia and the United Arab Emirates, which have a high concentration of wealthy buyers with money to spend. The UAE alone typically exceeds 300,000 vehicles annually in sales. A relatively high share of that is premium imports. BMW Group reported strong growth in the Middle East in 2025. Deliveries rose by around 10% year on year. High-performance models such as BMW M variants saw growth of around 38%. Global data expects the luxury vehicle segment in the Middle East to grow by around 7 to 8% annually, potentially reaching around 300,000 vehicles by 2033. Take Porsche, for example. Revenue per vehicle in the Middle East grew by more than a quarter between 2020 and 2025. The famous and high-priced 911 sports car is now 20% of Porsche's sales in the region, and the ultra-high-end Sonderwunsch customization business grew by 125% between 2020 and 2024. It's important to mention that these stats also include Africa and India, but Metzler analyst Pal Skirta told me that the Middle East is one of the highest margin growth regions for premium automakers. But in its annual report and in comments sent to CNBC, Porsche said the conflict in the region poses a risk to both supply chains and demand. Mercedes also confirmed that the Middle East is seeing double-digit growth and said that it is one of the strongest regions in the world for high-end vehicles such as the AMG G63, which has a starting price of around $200,000. Over the past 2 years, roughly, Mercedes has expanded its presence in countries such as Saudi Arabia, the UAE, Kuwait, and Qatar. Ferrari shipped 626 vehicles to the Middle East in 2025, a not insignificant number for a low-volume automaker. It's larger than the number of vehicles Ferrari shipped to the UK, Switzerland, and France. And in 2024, the region was the world's largest for customized Rolls-Royces by average value per car. There are two main threats. Short-term, conflicts could restrict travel or mobility, which could weigh on showroom traffic and sales. Long-term, there could be a hit to wealth if asset prices weaken or financial markets become more volatile. Mercedes told me in an email that it's too early to draw conclusions, but it is closely monitoring the situation. So why does this matter? A lot of these companies are hitting walls in countries that had up till now been key regions for profits and growth. They face steep competition in China and tariffs in the US. The last time Porsche reported results in October 2025, it posted its first quarterly loss as a public company. Mercedes' annual operating profit fell by more than half that same year. Even American EV makers such as Tesla have pushed into the Middle East as sales have fallen elsewhere. Global data said the region is resilient over the long term, but near term, geopolitical tensions tend to reduce discretionary spending on high-ticket items like expensive cars.